What is going on, YouTube? My name is Christian Robert, and on this channel we talk stocks, personal finance, and wealth building. And today I just wanted to share with you a quick video on something that's been on my mind, and that is 3 reasons why you should not invest in the stock market. Now, I don't believe this to be true. I think everybody should be investing and saving their money, but I think a lot of new and unexperienced investors should hear my message, and I hope you find some value in this. But the first reason I do not think you should invest in the stock market: unrealistic expectations. Now, I've had friends that I've tried getting to invest in the past, and I would always hear, not just friends, but anyone I would talk to about investing that wasn't, I would always hear a similar reaction. And that was basically, how much money can I make? And that tells me right there that you're not going to be very successful in investing, because you're already thinking short term and you're limiting yourself to so much potential. And this isn't something that you just throw a couple $100s in, or even a couple $1,000s in. You dump it in a penny stock, and even if you're lucky and it skyrockets and you call it quits, that's not the name of the game. This is a long-term plan. And I'm not saying you can't invest in penny stocks and speculative stocks, because I do once in a while, but you need to be thinking 5, 10, 20 years down the road. You need to be consistently building your portfolio and diversifying and adding in all these other elements. So for that, I do not think you should invest if you fall under that category. Now, the second thing is either a lack of income or a debt problem. Now, I was just listening to some Dave Ramsey podcasts, and I believe he said something along the lines of the average American carries around $6,000 to $7,000 worth of consumer debt, like credit cards. And if you have $6,000 or $7,000 you owe on credit cards, you should focus on paying that down, because more than likely you're looking at a 15 to 20% interest rate. And I mean, if you're owing that much money, you should just focus on your debt, reducing it. Now, I'm not saying you can't tackle debt and invest at the same time, but to a new investor, that's probably going to be challenging to you. I know I have a little bit of debt, and I managed to balance both. So that and a lack of income problem. Now, if you can't sit down at the end of each week and know that you can put aside 5, 10, 15% of your weekly pay, you might have a lack of income problem. And maybe not necessarily a lack of income problem, you might have an overspending problem. And for that, a simple solution would be jump on Google and type in a budget spreadsheet. I know a couple of guys on YouTube that helped me out kind of put together a budget. There's 3 guys that I highly recommend. They've talked about debt, similar topics that I talk about, but that would be Baby Steps Brad, True Financials, and JJ Buckner. 3 guys I highly recommend you looking into. Focus on paying down your debt, or bringing up your income, or cutting expenses, one of the 3, and then you should be able to start investing consistently. The key word is consistently. And so the third and last reason is emotions. Now, this is the big one. I can honestly say that my emotions costed me tens of thousands of dollars early on in my investing career, and it's still something that haunts me to this day. And we're talking almost, 9, 10 years ago. I mean, if you just jump into the stock market blindly, you're going to get burned. I made some quick money in the beginning, and I thought I was the next Wolf of Wall Street and I knew everything, and I was wrong, and I got burned very, very badly, and it was a very humbling experience, and I don't want to see that happen to anybody. I'm being totally honest. I mean, it sucks. You don't know what to expect when you jump into stocks and you're unprepared. You wake up, the stock market's down 5%, your top holding is down 20%. You panic, you either sell and you take that big loss, or worse, you take out margin and you're trying to press your bets, and then you end up losing 2-3 times the amount. And it's just an ugly, ugly scenario, and I don't want to see anybody have that happen to them. Now, if you can't handle your emotions, you need to read some books. You need to learn what you're getting into. My microphone is standing on some great books. I mean, I got Peter Lynch books, Jim Cramer books. Read Rich Dad, Poor Dad. Just read. Reading is so crucial to a new investor. Reading can make such a difference to your philosophies and your approach to the way you handle or buy stocks, and it'll go a long way. So for that, those are 3 reasons why I do not think you should invest in the stock market. Now, I will do a follow-up on 3 reasons why I believe you should invest in the stock market. But I hope if there's any new investors out there that are hearing this, you hear my message and you found some value in this. So that's all I have for you today. If you haven't already, subscribe, like the video, comment down below, and I'll see you in the next one.